this is Raman Gill. Welcome to episode 66 of the 10,000 Trade Show, where we are mastering trading and creating excellence through the deliberate practice and analysis of 10,000 trades. In this episode, we will take a look at a double bottom trade setup. Double bottoms are created usually when price comes and hits a level and is not able to break that level. It comes down and hits the level once again, giving us a double bottom formation. Once the price has rejected the level twice, the chances are quite high that it will move in the opposite direction. So we'll go on to the charts and take a look at what a double bottom trade setup looks like, where to enter the trade, where the stop loss needs to be placed, and how do we exit the trade with a profit. Here we are looking at a double bottom trade setup. In this example, we are looking at British pound US dollar 15-minute chart. Double bottom is formed at the bottom of a downtrend. Here we see the price coming down and price comes into a support level that it's not able to break. In this example, we are at 1.4180. So these 80 levels are important support and resistance level. We see the price turning around at these levels quite often. So price comes into this level, is not able to break through, tries 3 times to break this level, fails, and closes above. Then price goes up, comes back down, but fails to even reach this level and immediately gets pushed back up. At this point, this looks really good. We have a first bottom and a double and the second bottom here. So in a double bottom situation, sometimes we can have the two bottoms at the same level, and other times one can be slightly above the other. So if the second bottom is higher than the first one, that's a really good sign, because that means the chances are quite high of the price moving to the upside. In this case, we get a bullish candle close and then another bullish candle close. So we can take a trade at either one of these locations. If you're aggressive, you can enter a trade right here, and the stop loss would go below here, below this first bottom. So you want to make sure trade has enough room to breathe in case it turns around and gives us a triple bottom here. However, in this case, we don't see that happen. We do put our stop loss at the bottom because we want enough room to breathe, and then we enter long here. The first challenge comes at this support and resistance level. Price breaks through, does a back test of that, and then continues on. So we stay in the trade till we see a good reason to get out of it, and that would be red candles that would suggest that price may turn now. So we keep on going till the candles are green, and at this point we start to see red candles. However, they are quite small considering the large green candles that we are seeing here. So we stay with the trade, and then we notice that the price comes and touches our resistance line the second time around, and it's not able to break. And at this point, we can exit the trade here because it's not breaking, or you can exit it here once we get a larger red candle compared to the other candles that are around it. So this one suggests that the price is not likely to continue higher. We're seeing a lot of red candles, a lot of just choppiness back and forth. So this is a good time to get out of the trade. And this is an example of a double bottom. So just to summarize, we have a price coming in, establishes the first bottom, comes and tries the same level, again giving us a second bottom here. Then price starts to move up. We take our trade right over here, putting our stop loss below the first bottom here, and we're looking for a move to the upside, and we stay in the trade as long as the price keeps going, moving higher. Once we start to see red candles, we haven't really seen any strong red candles here. They're all smaller than the green ones, so we stay with the trade. And once we notice that the price is not willing to move any higher, time to exit the trade. In this example, from entry to exit here, we have 140 pips. So our profit would be 140 pips, or $1,400 if we are using one standard lot. I do have a special announcement to make. I'm launching a new course called Demystifying Forex Fundamentals. One of the things that I've noticed is a lot of retail traders
we don't understand the fundamentals too well. I know most people look at the Forex Factory news. However, most people I find do not have a good understanding of what the news means and how the news drives the market. Over the years, I have picked up a lot of concepts through different courses I've taken and also through my MBA. So I feel like this is something that's missing in the market at this point. And to rectify that situation, I am launching the course called Demystifying Forex Fundamentals. And in this course, I will be going over not just the COT that I normally talk about in my weekly analysis, but I would also be talking about how to gauge market sentiment. I will be looking at how to understand the news reports that come out. What does CPI mean? What's GDP? And how does that impact the markets? How do the interest rate decisions impact the market? We'll also be looking at leading indicators and what these indicators are and how we can use them to make better trades. We'll look at intermarket correlations as well as currency correlations. We'll take a look at how to use equities to trade Forex as well as options data to take better trades in Forex. We'll take a look at US dollar index, as well as we'll take a look at different country profiles and also looking at what impacts their currencies. And we'll also take a look at carry trades. So the price for this course will be $397. The course starts on April 1st, 2017. However, I am doing a pre-launch right now. And if you would like to register for this course at this moment, the price is at $250, which it will go up in a week. For more information about the course, please visit tradingwithvenus.com/fundamentals. Thank you so much for joining me today. If you like this episode, please like, comment, and subscribe below. As always, it was a pleasure sharing these trades with you, and I will see you on the next episode.